actually a really powerful idea. So in this explainer, we're going to pull back the curtain and show you exactly how it connects the money you saved up with the growth of some of the world's biggest companies.
Okay, let's just start with this. Think about a company you really love, or a product you use every single day. Now, what if you could be more than just a customer? What if you could actually own a piece of it and have a real stake in its success? Well, that simple, powerful idea is literally the foundation of the entire stock market.
So here's the fundamental puzzle that the market solves. You've got companies on one side that need cash. They need capital to build new factories, hire people, and invent the next big thing. And on the other side, you've got people like us with savings that we'd really like to see grow. The huge question has always been, how do we build a bridge between those two groups?
And that bridge, that absolutely brilliant solution, is the stock exchange. It's the engine room where this whole connection happens. So let's break down what it actually is.
Honestly, the simplest way to think about a stock exchange is just as a giant, super organized marketplace. But instead of buying and selling, fruits and vegetables, people are buying and selling tiny pieces of companies and other financial things called securities. It's the central spot where all the buyers and sellers can find each other.
But this marketplace is so much more than just a place for trading. It's absolutely vital. For businesses, it's how they get the fuel they need to expand, which in turn creates jobs and boosts the whole economy. For you, it's a place to put your savings to work. It even helps bring in money from other countries and lets governments borrow for huge projects like new highways and hospitals. It's a real engine for progress.
Okay, so we've covered the where, the stock exchange itself. Now let's dig into the what. What exactly are you buying and selling in this marketplace?
So the official term for the stuff that gets traded is securities. I know, it sounds a little technical, but the concept is actually super simple. It's a legal instrument that represents one of two things. Either you own a piece of something, or you've loaned money to something. And those two paths have names, shares and bonds.
And this is the core difference you really got to get. When you buy shares, think ownership. You are becoming a part owner of that company. That might mean you get a slice of the profits, which we call dividends, and you even get a vote in how things are run. But with bonds, think loanship. You're basically acting like a bank. You're lending your money out. In return, they pay you fixed interest, and then you get your original loan amount back at the end. So one is owning, the other is loaning. So let's zoom in on that ownership piece. If you go the route of buying shares and becoming a part owner, what's in it for you, the investor? What are the actual benefits?
Well, the potential returns can come in a few different forms. You might get dividend income. That's when the company shares its profits with you. The one most people think about is capital gains. That's just the profit you make if you sell your shares for more than you paid for them. You also get those voting rights we talked about, giving you a real say. And your shares are an asset. You can actually use them as security or collateral if you ever need to get a loan.
Look, if there's one thing to let sink in from all this, it's this right here. You are not just gambling or trading a number on a screen. When you buy a share, you are legally becoming a part owner of that business. That simple fact completely changes how you should think about it. It's not just a transaction. You're becoming part of that company's story.
Okay, so the theory sounds pretty cool, but how do you actually do it? How does a person go from having savings in the bank to owning a piece of a company? Let's walk through the actual practical steps.
First things first, you can't just wander onto the trading floor of the stock exchange. You need a guide, someone with a license and access to the market. That person, or these days more likely a company or an app, is called a stockbroker. They're your gateway into this world.
The whole process really boils down to 4 pretty simple steps. First, you find a licensed stockbroker you trust to be your guide. Then, you open a special account with them called a depository account. We'll get to that in a sec. After that, it's the fun part. You do your research, decide what company you want to own, and you place your order. And finally, your broker handles the technical stuff and buys the shares for you on the exchange.
So what is this depository account thing we just mentioned? It's a really fantastic system. Just think of it exactly like your bank account, but instead of keeping a digital record of your money, it keeps a secure electronic record of all the shares you own. This is huge because it means you don't have to worry about losing some physical paper certificate. Your ownership is all logged safely and digitally.
Now for probably the biggest question on everyone's mind when they're starting out, risk. Is this whole system safe? Is my investment protected from scammers or people trying to cheat the system? And that's an absolutely critical question to ask. So let's look at the rules designed to protect you.
The good news is it's not just one thing. There are multiple layers of protection. The stock exchange itself has its own really strict rulebook.
Then you have the exchange's board of directors, who are always supervising things and can kick out anyone who breaks the rules. And then watching over the entire system is the big government regulator, the Securities and Exchange Commission, or SEC. Their entire job is to make sure the market is fair and orderly for everybody.
So when you boil it all down, the stock market isn't just some abstract concept for Wall Street experts. It's a real, tangible bridge that connects our savings to growth, and it turns us from just being customers into being owners. It's really a marketplace for the future, which kind of leaves us with one last big question. Now that you know the basics, what piece of the future do you want to own?